think about this in your own lives. How many times out there have we been on our high horses thinking we are the best, we're unstoppable, and then what happens? Some curveball comes into our lives and it throws us off. And that's where the markets are right now. They're in extreme greed, where we're at a point where the investing public thinks nothing can go wrong, and ultimately that's exactly historically, and this is going to historical analysis now, that's exactly where things go wrong.
In recent days, significant events unfolded in the cryptocurrency industry. The SEC filed lawsuits against two well-known exchanges, namely Mans and Coinbase. These actions caused a ripple effect throughout the industry, leading to a rapid decline in crypto markets. The trading range, which had been stable between $27,000 and $30,000 for some time, now faces uncertainty. Additionally, there are concerns about a potential crash in the commercial real estate market, which could further impact the fragile U.S. economy. A substantial amount of commercial mortgage debt, around $1.5 trillion, is due by the end of 2025. However, higher borrowing costs, tighter credit conditions, and declining property values due to remote work have heightened the risk of default. Ratings agencies have estimated that $5.8 billion worth of commercial mortgage-backed securities will not be able to be refinanced between April and December 2023. This situation has led to a fast decline in commercial real estate. Elon Musk, CEO of Tesla, expressed his views on the matter in a recent tweet, suggesting that home values may be affected as well. For those familiar with Gareth's previous discussions, they are aware of his bearish outlook on cryptocurrencies since their recent peak. However, in this video, Gareth will share his latest analysis and predictions, focusing on the top movers in the market and presenting a compelling argument about the potential stock market topping, real estate crash, and what might be next for cryptocurrencies.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
And the problem is that what we know is the Fed continues to probably raise rates later this year. Yes, they will likely pause next week, but they also have, so the government, and check this out, this is not being talked about yet. In the next 3 months, the government will have to sell $1 to $1.5 trillion in bonds to the world. All right, now you ask yourself this, number one, what interest rate are they going to have to do? Essentially, this is debt that's going to be rolling over, that they have to essentially refinance. So you're taking debt that was probably at a 1 to 2% interest rate. You're now looking at selling it to the public or to the world at around a 5% interest rate. So think about the U.S. deficit and what that's going to do to the U.S. deficit. By the way, there's a reason why when they passed the debt ceiling, there's no cap on it right now. For the next 1.5 to 2 years, no cap whatsoever, because you have all these factors here going on where they have to unload a ton more debt to keep the merry-go-round going. So now you're talking about how much is going to be sold to the world, and then what interest rate is that going to be at? And again, is that a headwind? Well, I would think so. Then you take into account, and I had a great Spaces last night, verified Spaces, by the way, every Tuesday night at 7 p.m. We had an amazing group of experts on last night. We were talking about the commercial real estate market and what a massive, massive collapse that could be. So ultimately, that's coming later this year. We know the banks are already stressed. We know banks have failed already. Now you throw into the mix the commercial real estate crash. Now you go back to the Fed saying, hey, listen, we're going to have a mild recession. And I said this before when they said this. As soon as they say mild, I get scared. I get scared because every time they say something, it's never what they say. It's always worse. You could go back to 2007. Oh, it'll be, a minor correction. Real estate will correct. That's fine. Well, look at what happened. The Great Recession. We had massive downside in the markets, collapses every which way. You go back to transitory inflation. What did that turn out to be? So everything they do, there's always this miscalculation. Whether it's hopium on their part or not, it's miscalculated. So you have to say to yourself, all right, if we are going to continue to see this economic data, now jobs have been staying strong. That's the one positive in this overall picture. But the other side of it is the other economic data is absolutely weakening. So again, when all is said and done, you look at the second half of this year, I have it priced in number one. By the end of the third quarter to fourth quarter, we will be in a recession. The stock market by the third quarter, which we're getting close to, right, will be putting into an effect essentially where we're going to be the markets, the stock market will start to price that in. All right, all it's going to take, especially with the VIX at these levels. In fact, let's go back to the charts. I want to show you this VIX. All right, we're going to look at this. All right, so if we go to the CBOE volatility index, the VIX is trading at 14. All right, basically touched 13 this morning. If you go back in time, we are still at the same levels on the VIX that we were in 2021. Now, to me, this is a negative divergence. And you say, well, why is this a negative divergence? And the answer is this, and think about this, right? The negative divergence is that people are acting like this is a new bull market, but we're not at all-time highs. So last time the VIX was at 14, we were at all-time highs, crypto was at all-time highs, the stock market was at all-time highs. Now, we're basically at those same levels on the VIX, but the markets are lower. Again, that's a negative divergence. So that has me concerned as well. It's essentially people being as euphoric as they were at all-time highs, but we're not at all-time highs. Essentially, people are getting conned into this belief by the psychology of the market.
During a period of credit crunch, banks significantly tightened their lending standards, creating difficulties for businesses and households seeking loans. Borrowers may be required to agree to stricter terms, such as higher interest rates, as banks aim to minimize financial risk on their part. Even prior to the onset of the industry crisis, banks were already implementing stricter lending standards. The Federal Reserve's quarterly survey of loan officers revealed an increasing number of banks tightening their lending standards and experiencing a notable decrease in demand. Even before the collapse of Silicon Valley Bank and Signature Bank in early March, the commercial real estate market was facing various challenges, including rising interest rates and diminishing demand for office space due to remote work policies adopted by more companies. In the video, Gareth presents a bold prediction for the future price of Bitcoin and discusses the recent lawsuits filed by the SEC against prominent cryptocurrency platforms, Binance and Coinbase.
And so you have all these people talking about deflation. That's not going to happen. And I'm going to tell you why. It's not going to happen because the reason people are making more money is because the general wage got raised. We know people that were making $12 went to $25 per hour. All right, that is going to be sticky. You can't start reducing people's wages. Once you set them at $25 an hour, you can't bring that down. That's going to keep inflation sticky north of 3%. With it north of 3%, ask yourself this: when the heck is the Fed going to cut rates? How can they cut rates? And you might say, well, oh, they could cut rates, no big deal. Well, if you're at 1.5% and you raise and inflation jumps to 9%, now if you start at 3, where is inflation going to top out? 15%? How are we going to feel about that? I don't think the Fed wants to do that. They're going to be very reluctant to lower interest rates. Now, right now, markets, are they pricing in anything like this? And the answer is absolutely not. All right, so those are a couple things. Now, I want to get to Bitcoin, right? I want to talk a little bit about Bitcoin here. Bitcoin having a beautiful reversal yesterday. So essentially, you have to understand the metrics going on. 2 days ago, the SEC sued Binance, and they levied some really serious accusations. If these accusations are true, that's cataclysmic for the crypto markets. Now, what I find fascinating here is you essentially have a market that yesterday rebounded and negated that move. Now, to me, this is an interesting dynamic, and I'll tell you the dynamic that honestly makes me intrigued, is that you have a crypto investing public that essentially is saying, no, we don't believe. The SEC has lost credibility to the point that when they say that Binance was doing shady things with funds, we're not going to believe them. Because if this was true and Binance ultimately collapses, the detriment to the crypto markets would be massive. All right, so you have investors that are coming in and saying no. Now, granted, yesterday the SEC sued Coinbase. Now, remember, there's a difference here. The Binance stuff, the allegations were really bad. Coinbase, the SEC was just saying, hey, you're allowing people to trade unregulated securities. That's nothing new. We knew that already, right? The SEC had already said that, hey, listen, the crypto, everything but Bitcoin's essentially a security. Okay, well, if they already said that, then yeah, you're right. Coinbase is letting people trade unregulated securities. So I think that's one of the keys, is also when people started to realize that, that's when they got to a point where they said, all right, shorts started to cover, you saw a little push up, and now we're popping up. Now, as I take a drink here real quick, and it's not vodka, by the way, it's actually tea. But if we go to the charts here, what I wanted to talk about here is the chart basis. What is the chart telling us? Because that's all news. And you guys know, yeah, I pay attention to news. I think even technical analysts and technicians need to know what's going on with the news. But what we need to do is say, what is the chart telling us? And the chart's very simple. The chart is saying that right now we are holding this area of support. And I want to draw a trend line in here. As long as you hold this general area, and if I put a line through this low right over here, we can clearly see that we closed that down day on Binance right at that level. We then rallied back up. So we're stuck between a range. Now, this is your upside resistance, very clear right here. This is your downside support. If support breaks, we're going to 24,000. That's your next target.
The U.S. Securities and Exchange Commission has made a significant move against Binance, one of the most prominent cryptocurrency exchanges worldwide. In a series of allegations, the SEC has accused Binance and its founder of operating with deceptive practices and has filed multiple charges against them. This enforcement action signifies the SEC's determination to regulate cryptocurrency firms that attempt to bypass existing regulations. A critical aspect of this development is the broader question of whether cryptocurrencies should be subject to a unique regulatory regime or treated as digital versions of traditional financial instruments already under the SEC's jurisdiction. The SEC believes that a considerable portion of the crypto industry falls into the latter category, prompting the agency to push for compliance or the cessation of operations in the United States for crypto companies. We invite you to share your thoughts and perspectives on the SEC's recent crackdown and its potential implications for the crypto world in the comments section below. For more daily dose crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.